to this very special edition of Taking Stock, the show where we take stock of the week gone by and prepare you for the next trading week. I'm Sonia Shenoy and with me is Anuj Singhal. It's a special trading session because it's the start of a brand new year. It's Gudi Padwa, so let's wish all our viewers a very, very happy Gudi Padwa and hope you have a great, prosperous year to come. Anuj, it's been, slightly tricky for our markets. I mean, the headline index was down about 2% this week, but we did have a lot of action in the mid caps and the small caps. So if you are a good stock picker, you would have made a lot of money. But for the headline index, it's just been ambling around that 75-7600 zone.
Oh, I think you've hit the nail on the head. The market had a big run in the month of March. It wants to consolidate now. There's some problem with fund flow, so the market is digesting that. But as I said, it's an ace picker stock market, and you've seen so many stocks go up. Tell you something, we have one of the biggest ace stock pickers in our studio now, Raamdeo Agrawal, joining us from Motilal, Oswal. Raamdeo, hi, good to have you on the show. You join us on, of course, the auspicious day of Gudi Padwa.
Yeah,
so happy New Year to you and your team. What's your sense about this market? A lot of stocks have made a lot of money, but at index level, we are consolidating or digesting March gains. How would you approach the market from here on?
Yeah, so I don't look at markets for the very short-term gains or anything like that. So what's going to happen in April or May is not matter of concern for me. I mean, generally, I don't bother about very short-term movements. So what happened in March was, I think, one of the biggest months, 10-12% kind of move, very large. So, and actually, we saw one of the lowest subscription for mutual funds and highest redemption. You look at what is the tragedy. The investors invested the highest amount, and they took away the highest amount at the lowest index. And while they were taking away, the market took off, and they must be really feeling miserable. So
but that's how retail generally behaves,
yeah,
right?
but I wish my investors don't behave like that. And I'm sure that all across the mutual fund, I think we have seen the I think after 23 months, March saw gross exits of about a few thousand crores by the investors. So the month in which markets did the best job, they not only not bought anything, they actually took money out. So I think this is the biggest tragedy of investing, and right now economy is in slow mode. And I think one of the most encouraging thing today, I think the real Gudi Padwa gift was today's our governor's statement that India is on the cusp of revolution.
Yes.
He's not known for loose talking. This is not a political talk. There is something in that statement. I think you all must.
In fact, I wanted to come to that. We noticed that there are some real signs of a pickup, perhaps in the capex cycle, or green shoots, as you call it. Whether it's auto sales that have picked up, cement sales have been good, and even BHEL out of all reported good numbers. Would you corroborate that view?
Yes. See, slowly the what do you call recovery is gaining momentum. I mean, it started with road sector, then we are seeing a lot more in a sustained way in commercial vehicles. We saw the March quarter being extremely good for some of the auto stocks. I think the results which are expected, Telco is going to be very good. Eicher is going to be record numbers. Yeah. Hero Motor looks to be very good. So Ashok Leyland will be very good. So I think auto sector in general will do well. Private sector banks will do well. Some cement companies should also turn around on the lower cost, higher volume. So we are seeing, but then there are disasters also, in the sense that there are some segments where, like say, entire PSU bank basket will again see a washout with the provisioning and all. You are going to see record results from OMCs. And then aviation companies will do very well. All 3-4 listed Jet, SpiceJet, and our own Indigo. So I think, see, the overall Q4 results are going to be very flattish, 2-3% plus minus. But within that, there will be a lot of winners and losers, and it's going to be very narrow kind of winner kind of set. But as we go along in this year, my sense is 16-17. More particularly after the monsoon. So as quarter after quarter, I think the momentum will pick up. Okay. So fourth quarter this year should be the best quarter compared to the first quarter what we are going to see in next 3 months. So I would remain bullish, and I would rather increase my bets. We must keep looking for the statements like what governor said, You all should find out why he is so bullish. What is that revolution? I mean, this is a very aggressive word for a central banker to say that.
Okay. So Raamdeo, let's take it one by one. You know, one of the stocks that you've liked and is one of your top holdings also is Infosys, and that's been close to lifetime highs. I mean, if you remove the last 4 days when it's seen a bit of profit booking. But as a sector, do you think IT can do well, led by Infosys, or do you think Infosys would do well regardless of what happens to the rest of the sector?
No, I think it would be, Infosys also has to go through the whatever slowdown challenge or competitive challenge they have. But leadership does make a difference. I mean, what was the due share of Infosys in the last 5-7 years? That has not been given. I mean, they have not got it. So there's a kind of reversion to the meantime. So they will get back with the new leadership and new processes. I think their deal wins have been very good. And one of the, apart from the cost volume price mix, currency has been, one of the big factors. Year on year currency has been 8-9% devalued. So how the devaluation translation benefit in terms of rupee will be used by them, whether they are going to use it for enhancing the margin or giving out to the employees, or using it for the marketing, or giving some concessions to the for deal wins. So that has to be all seen in when the results come. The mood seems to be pretty bullish about this result. What you hear about Mr. Sikka's interview recently, he has been sounding far more confident about his 2020 targets, about $20 billion sales and 3% margin expansion and all. It looks, I mean, one is all set for, this is almost my first largest holding in the fund. So we're all expecting good results.
Yes. Oh yes, you have it in almost all your funds, the Focus 25, Multi-Cap 35, etc. And one of your other large holdings, and if I may say so, the most volatile holdings has been Interglobe Aviation. I heard you briefly mention the aviation space. Interglobe has now recovered from 700 to 1000 after the management did clarify to us that, that Q2 disaster or fiasco, you'd want to call it, about the late numbers was a one-time. Are you keeping the faith with this one?
Yeah, even at 700 we kept the faith. So, see, you don't buy stocks for 3 months, 6 months, or one statement here and there. If there is a value, there is a value at 1000 rupees, also at 900 rupees, or statements are a little bit here and there. Because, see, I mean, this is one industry which is somewhat crazy in the sense that it has not created, it has destroyed more wealth worldwide than it has created. But some companies have definitely won because of their own very unique strategy, like Southwest in US or Ryanair, or I mean, these companies have created wealth. Now coming to Indigo, India is a very unique opportunity in the sense that it's very underpenetrated in terms of amount of air travel which happens. We're talking about just about 70-75 million passengers in a year. I think number of aircrafts of that 180-200 seats is just about 225-250, catering to entire domestic market. I believe in China it is upwards of 2,500 or 3,000 aircrafts, 10 times bigger. US, every company is of that size. So, and then what is happening is the travel needs in this large country is very high. And railways in 30-40 years have not, I mean, the trains which were running 40 years back, I mean, for me to come from my native place, it used to take 20 hours, it takes same 20 hours, it comes at same time. I can't believe it. I mean, and now the prosperity and the challenge of, kind of time has increased so much that this thing, air travel is actually, if one can afford, I mean, I think sky's the limit in terms of volume. So if oil, see, one of the things is that outlook on the oil is weak for next 4-5 years. So if oil remains at $60-70, the ticket prices will remain very affordable. And that will keep the market very stimulated year after year.
Okay.
And if that remains so, the competition is weak, and these guys have 50% of the foreseeable capacity ordered under themselves with a 15% fuel efficiency. I think at whatever, right now it must be about what, 18-19 times? Now at 38,000 crores market cap, and we expect about 1,900 crores profit this year for March 16. So that gives about 20 times trailing forward would be about 14-15.
Yeah, and of course there's expectation that this time there could be a decent dividend as well, just to
dividend they'll give.
some
Dividend they'll give whether because they've done that interim dividend before the issue.
Sure.
I hope they reward the post-issue shareholders also.
Sure. Okay, Raamdeo, the other stock that I want to discuss is HDFC, because that's dragging market quite a bit. It's now trading at its lowest valuations in last 5 years. Maybe historically low valuations. What's going wrong here? The market is clearly fearing something.
I think what I've heard is that there's some provisioning requirement which has come up because of their corporate loan book. That's the one thing. And I think, so because of the mix, they have a very unique mix of 1/3 being corporate and 2/3 being retail. Retail is doing very fine. Mortgage market is just roaring. It's growing about 20-22%. They have the best in class intermediation cost. Liability is not an issue with them. So I think they're in a very unique position. They have a mutual fund, they have a bank, they have a insurance company. So if you look at HDFC as a whole package consolidated, I think they are growing at about 12-13%. P multiple is I think 16-17 or so. So I think this is a very large unpopular stock right now. As things turn up, I think they'll do well. They should do well. I don't think there is much of concern in that.
This is getting to be a very interesting discussion, but we have to take a break. So just stay with us for a bit. We'll take a short mandatory break and come back with more from Raamdeo Agrawal of Motilal Oswal. Stay with us.
Welcome back. You're watching Taking Stock, and we have Raamdeo Agrawal with us. Raamdeo, we had the RBI rate cut, of course, 25 basis point, and now we are running into the earnings season as well. Do you get a sense that just in the near term the market is running out of triggers, or do you think there are enough triggers and the market has baked in maybe the worst of earnings and will move on regardless?
The short-term thing, the problem is that market has enough triggers. I mean, they can cook themselves in the sense that someday they might have the 10% spike in the oil price, or some Chinese statement, government saying something, some US data. I mean, now you have enough global stuff, and then we have enough local things also happening. Then we are on your right earnings season is starting, which is most exciting for the markets. So if you have series of 5-6 big ones coming out with big numbers, surprises, I think market will definitely take warmth from there.
Okay.
So market always has enough triggers. It's and then FI flow. 3 days, $200 million. You'll see the color.
I like the way you said market can cook up any excuses. You hit the nail on the head. But one of the big sectors that performed in the last fortnight has been cement.
Yes.
And I don't know how much to believe. I mean, most of these stocks are sitting at 52-week highs, Grasim, Ultratech, etc. Is there really a pickup in cement demand, or should you be a bit cautious on this sector?
No. I think if you believe that India is not going to happen, without cement nothing is going to happen. So very credible guys also are looking at cement, those who know the stuff, and what Ultratech has done in terms of consolidation is amazing. So they're really big boy. So, and clearly in last 4 quarters nothing happened. So now if anything is happening, we are hearing from December there is an actual pickup in cement demand, particularly in north. And good thing is that the cost is lower, so your break-even point is also lower. So any uptick in demand immediately translates into bottom line expansion, and it's a very high fixed cost kind of a business. So there's huge operating leverage. So what happens is 10% additional capacity utilization can give you 100-200% increase in profits.
So it's still not too late to buy the cement stocks, you think?
Yeah. It is going to be a 5-7 year story.
Okay.
Because after so many years, cement is going to come back. There's not much capacity is in pipeline, and there is good level of consolidation. So I don't think, and now the banks are in such a condition that they are not going to fund anything and everything. And so I think in a lot of these capital intensive industries, one of the things is that new capacities are going to be very difficult to come by unless profitability is extremely high. The speculative build up of the capacity with the help of the banks, that's not going to happen.
Okay, Raamdeo, so the big question then, are we at the cusp of a new bull market? By bull market I mean, can equities outperform real estate, fixed income, especially
Gold.
fixed income, gold,
Yeah.
some of these asset classes by a decent margin over the next 3 or 4 years?
Yeah, I mean, see, if you look at 34 years number, there's absolutely no doubt. We have made a lot of money. I mean, I have seen this market growing by 250 times. I mean, I started buying stocks in 1980, index was 100. Today it is 25,000. So there is no reason to believe we have the better government, we have the better financial condition. At the bottom of the market, we have $350 billion of reserve. We have fiscal deficit of 3.5%. We have inflation of 5%. I mean, everything is going for India, and we have our governor also saying that we are at the cusp of revolution. So, what I'm saying is that there is no reason to believe that that will not make money. The issue is how much money we'll make. Will we comfortably double in next 5 years? I don't think there is any problem. I think to expect 15% doubler, I mean 15% compounded for 5 years is a very reasonable expectation. And I think we should be able to make it if there is not complete breakdown in the global economy or local economy. I think in a normal condition of 6-7%, 8% growth, we don't need 9% growth for making 15% compounded. At 9%, it will be a breakout charts.
So for the next, say, 1 to 2 years, if someone has a horizon, where do you see more money being made? Is it in the mid caps or non-index stocks, or do you think a lot more value lies in the large caps?
See, the way we look at it is we look at independent of capital.
Yeah.
We look at capitalization. We look at quality and growth. Wherever there is a quality and growth, you have a chance. I mean, if it is a lakh crore company, I mean, we see that Infosys can also make money. It's a 2.5 lakh crore. We are also bullish on TCS, which is 5 lakh crore company. And that is one end of it. And other end, we have smaller companies where we are putting money. Indigo is I think now it is 40,000 crores, so it has become a little bigger. There are other smaller companies also. So you can make money at any size so long as there is a quality and growth.
Okay. No, that point is taken. Raamdeo, just one more stock question, because we have to address this. Maruti and the de-rating that's taken place because of yen, and that's one of your favorite stocks. How do you go through a period in which you see so much global uncertainty, especially regarding currency, which can completely change the equation?
Yeah, so clearly, in these kind of situations, if after 3 years our outlook is, I mean, after this hump, say 6 months, 8 months, once the Gujarat capacity comes in, they'll have enough capacity. They'll have a capacity constraint for a few months in this year, and then they have this so-called currency-related issue. Unless it goes completely out of hands, again yen goes to 80 or something like that, then you have a big problem, But if it is 4-5% kind of thing, clearly, I mean, entire 3-4 quarters is gone in terms of earnings growth. It will become very muted. But volume growth, I mean, it can, see, markets have their own mind. What market can do is the P multiple can shoot up. The earnings may remain suppressed, but looking at the volume growth, say if your volume growth possibility is 20%, because the economic recovery and lower interest rates and higher liquidity and recovery in the economy, by chance demand for cars is going to be very high, then what do you do? I mean, they are selling 20% higher volume, 20% top line growth, but bottom line is flat. Do you think the market will stay there? Obviously not. So what I am saying is that 5 years henceforth will be a much larger company. Maybe it will be $2 million cars rather than from 1.3, 1.4. So we have that faith. And with that only, kind of we stay on. But I am hearing what you are saying, and we are aware of it that next 3-4 quarters could be challenging. Let's see, I mean, what happens in this result. Unless they always make much more noise than what is the problem, so everybody is concerned. I think the problem is not that serious.
Yeah, I mean, consensus is expecting about 100 basis points impact on the Q1 margins because the yen impact comes with a lag.
Yeah, we'll talk after 3 or 4 weeks. Let's see what comes out.
Let's see what comes out. Okay, one more stock specific question, because a good company, great pedigree, United Spirits, taken over by one of the largest, but regulatory issues, as we all know, and that stock has only been getting hit because of that. How do you react at a time like this?
Yeah, so regulatory issues will always be there, but these are kind of franchises which have a huge longevity. You see, in investing and in the stock markets, wherever the franchises are very, very long, like 25 years henceforth also, the same brands will be of liquor and whiskies will be sold. So, and at a much more expanded kind of a thing. So, what has happened is 1/3 of India has this huge regulatory political oblique regulatory issues. And it's not that you have banned means there won't be consumption. There will be, of course, reduction in consumption, but through some channels the stuff will reach there. And in fact, the bootlegging and the underground activity will go to the roof. So I don't know. I mean, of course, this is a political decision of the state governments to keep it banned.
Yeah, now 4 states are
Yeah,
banned.
4 states, and also I don't know whether if all 28 states go banned, then
Then the company will have to shut down in
so
India.
for 5% whatever is the allocation, that will of course see loss. But we think that it has a franchise. It's a party is yet to start in India. It's a duopoly, and they have a huge franchise.
All right, Raamdeo, it was a pleasure talking to you.
Thanks.
And thanks for the calming nerves and the soothing words for a lot of investors. We really need that.
But you must take with pinch of salt. For last 30 years, I've been very bullish.
Yes, we know that. We have been speaking to you for the last decade, so we do know that. But it was a very enriching conversation, and we have a lot of food for thought for over the weekend. Thanks so much for joining us. But we have a couple of technical calls that we have to take as well, because there's been a lot of trading ideas this